Listen to me. If you are self-employed, freelancing, consulting, or running your own small business, and you are nearing retirement, or maybe you're already semi-retired and still doing some side work, I need you to wake up and pay attention right now. Because so many of you are making a massive, catastrophic mistake with your money. You are working hard, you are making good income, and then what do? You dump your extra cash into a traditional IRA or a basic savings account, or worse, you let it sit in a low-interest checking account because you think setting up a real retirement plan is too complicated. Are you kidding me? A regular IRA lets you put away a tiny fraction of what you could be saving. You are handing the tax man thousands upon thousands of dollars every single year, money that should be staying in your pocket, compounding for your security, protecting your future. The fear I hear from so many of you who are 55, 60, or 65 is simple. Susie, am I going to run out of money? Did I start too late? Can I ever actually catch up? Or you are afraid that if you lock your money away in a complex retirement account, you won't be able to touch it, or the IRS will audit you, or the fees will eat you alive. Stop it. Stop letting fear keep you broke. Stop letting confusion keep you standing still. Today, we are talking about one of the most powerful, absolute best wealth-building tools ever created for self-employed individuals, especially those of you in your 50s and 60s who need to supercharge your savings right now, the solo 401k, also known as the self-employed 401k. I want you to understand what this is. A solo 401k is an individual 401k plan designed specifically for business owners who have no full-time employees, other than themselves and potentially their spouse. Read my lips, if it's just you, or you and your husband or wife, you qualify. Why is this account an absolute superstar compared to a SEP IRA or a traditional IRA? Because with a solo 401k, you get to wear two hats. You are the employee, and you are the employer. And that means you get to contribute from both sides. Let's look at the numbers, because numbers do not lie. When you put money into an IRA, you are capped at a small amount each year. But with a solo 401k, as the employee, you can defer up to $24,500 of your income. But wait! If you are age 50 or older, you get a catch-up contribution. That's right. That means you can put away even more as an employee deferral. And if you are between ages 60 and 63, the Secure 2.0 rules give you an even higher super catch-up contribution. Now, that's just your employee side. Then you put on your employer hat. As the employer, your business can contribute up to 25% of your net self-employment earnings or W-2 compensation on top of what you already put in. When you combine employee deferrals and employer contributions, a self-employed person over 50 can stash away tens of thousands of dollars every single year into a single account, up to $72,000 total or more depending on your exact age and income level. Think about what that does for you. If you are 58 years old and feeling behind, or if you are 62 and still consulting part-time, a solo 401k allows you to shelter huge sums of money from income taxes while rapidly building a fortress of safety for your retirement years. Now, I know what you're asking. Susie, should I do a traditional solo 401k or a Roth solo 401k? Listen to me very carefully, because this decision can make or break your retirement tax situation. With a traditional solo 401k, your contributions go in pre-tax. It lowers your taxable income today. If you are in a super high tax bracket right now while working, that tax write-off feels great today. But remember, every single dollar you pull out in retirement will be taxed as ordinary income. With a Roth solo 401k, you put money in after taxes. You don't get a tax deduction today. But, and this is a huge but, that money grows tax-free, and when you pull it out in retirement, every single dime of growth and principal comes out 100% tax-free. If you are nearing retirement, having tax-free income from a Roth bucket is pure gold. It means your withdrawals won't push you into higher Medicare premium brackets, IRA, they won't trigger higher taxes on your Social Security benefits, and they give you ultimate control over your financial life. Most quality solo 401k providers allow you to choose a Roth option for your employee contributions. Another question people ask me all the time, Susie, what if I have an emergency? What if my money gets locked up? Here is another reason I love the solo 401k. Many plan documents allow for a loan feature. That means if life happens, you can borrow up to 50% of your account balance, up to $50,000, tax-free and penalty-free, paying the interest back to yourself, not a bank. While I never want you raiding your retirement unless it is an absolute emergency, knowing that safety net exists gives so many pre-retirees the peace of mind they need to start contributing heavily. So what is your actionable plan right now? What do you need to do today? Step 1. Check your business structure. A solo 401k works whether you are a sole proprietor, an LLC, an S-corp, or a C-corp, as long as you have no full-time W-2 employees other than yourself or a spouse. If you have full-time staff, this is not the plan for you. Step 2. Pick a reputable, low-cost broker. Vanguard, Fidelity, Charles Schwab, or specialized providers like Solo401k.com or Carry. Look for zero account maintenance fees and low-cost index fund investment options. Do not buy expensive, fee-heavy products that eat away your returns. Step 3. Set up your plan documents before December 31st of the tax year you want to contribute for. While you often have until your tax filing deadline, including extensions, to fund the account, getting it established properly now ensures everything is clean with the IRS. Step 4. Automate your contributions. Treat your retirement fund like your most important bill. Pay yourself first before you spend money on anything else. Do not let laziness, fear, or ignorance stand between you and the secure, powerful retirement you deserve. You work too hard for your money as a self-employed business owner to give away more than you have to. Take control of your money, open a solo 401k, maximize those catch-up contributions, and build the financial fortress you need. You can do this. Stand up, take action, and protect your financial future today.